The market meltdown. Is this the next financial crisis? As they saw the line go down, American investors may have felt an unfamiliar sensation: anxiety. The S&P 500 fell by another 4% in the week leading up to March 12th, leaving the world's most watched stock market down by 9% from its recent peak. The Nasdaq, dominated by tech firms, has plunged 12%. This is not the bold new era of American growth promised by Donald Trump in his election campaign, but what triggered this sell-off? Trump's trade war, economic power move, or global gamble? The president's unpredictable trade policies got things going. On March 12th, in the latest twist in Trump's trade saga, the U.S. levied tariffs of 25% on imports of aluminum and steel. After years of growth, the health of the American economy is now in question. Consumer prices rose more slowly than expected in February, hinting that the economy is shifting into a lower gear. The idea of American exceptionalism is being undermined as investors turn their eyes elsewhere. The Trump put. How one policy shaped Wall Street. During Trump's first term, investors believed that tax cuts and deregulation would override his protectionist policies. Any sell-offs triggered by trade conflicts were quickly reversed as the president did whatever it took to change the market mood. But this time, things are different. On March 6th, Trump stated, "I'm not looking at the stock market. I'm concentrating on the long term." His Treasury Secretary Scott Bessent echoed this, saying, "Wall Street has done great, but this administration is about Main Street." By March 9th, Trump avoided questions about a possible recession, calling it instead a period of transition. Investors are moving money abroad. Here's why global markets have become the new safe haven, while American stocks tumble. Europe's Stoxx 600 index has risen 12% in dollar terms. Germany's DAX is up 19%. China's Hang Seng index is up 17%, driven by AI hype and a falling US dollar. For investors worried about a US downturn, overseas markets are looking increasingly attractive. Tech stock casualties, the biggest losers. The sell-off has hit tech stocks the hardest. Broadcom and Nvidia down 15% this year. Tesla, Trump's close ally Elon Musk's company, has fallen 39% in 2024. On March 10th alone, Tesla's stock plunged 15% as European consumers boycotted its cars. Warning signs beyond stocks. What investors must know. The U.S. economy's struggles extend beyond the stock market. The U.S. dollar has dropped more than 5% since January. Junk bond yields have spiked, signaling growing credit risk. Goldman Sachs has cut its U.S. growth forecast for 2025 from 2.4% to 1.7%. Recession ahead? Key economic risks. Investors are now bracing for a possible recession as 1. Household savings from the COVID-19 era are running out. 2. Rising interest rates continue to hurt mortgages. 3. Uncertainty surrounding Trump's economic policies looms large. The Fed is under pressure. Will Powell cut rates faster? A month ago, the market saw a 70% chance that the Fed's policy rate would stay above 4% by the end of the year. Now, that number has collapsed to just 12%, with investors betting on aggressive rate cuts. Even with inflation still above target, the Fed may have no choice but to cut rates sooner than expected. The market is cracking. Here's why investors are worried. Despite the sell-off, U.S. stocks remain expensive by historical standards. The S&P 500's price-to-earnings ratio has dropped from 25x to 21x in less than a month, but many fear it's just the beginning. More tariffs, more volatility. How bad could things get? This market meltdown is far from over. Stay tuned for the latest analysis.